I'm Rich Santos, Managing Partner of Wardroom Capital Group. We help people invest in real estate without the typical hassles that come with managing real estate. Big changes are coming to the multifamily market. Rent control, interest rates, eviction policies. Some say this will crush landlords, while others believe it's the best opportunity in years. So will the new presidential administration kill the housing market, or will it supercharge it? Let's break it down. Before we talk politics, let's look at where we are at today. Demand for rentals is at an all-time high. Home ownership is out of reach for many, which means more people are staying in rentals longer. Interest rates remain high, but there's talk of cuts. And if that happens, financing could become easier for investors. Supply chain and labor issues have slowed new development, making existing multifamily properties even more valuable. So, no matter what policies come next, the fundamentals of multifamily real estate are still strong. But how will the new administration's plans help or hurt the market? Let's talk policy. Depending on who you ask, these changes are either a lifeline for renters or a disaster for landlords. Here are some potential positives for multifamily investors. Government-backed incentives for affordable housing. Tax credits and financing options could make development more attractive. More first-time homebuyer programs. If more renters can buy homes, that could free up rental supply and stabilize rent growth. Infrastructure investment. If the government pours money into cities, job growth could drive rental demand. Now here are some challenges for investors. Rent control expansion. This could cap how much landlords can increase rents, making some markets less profitable. Eviction moratoriums and tenant protections. While good for struggling tenants, they could make it harder for landlords to manage non-paying renters. Potential tax hikes. 1031 exchanges and capital gains taxes could be adjusted, impacting investment returns. So are these policies a threat or an opportunity? That depends on how you invest. Like any shift, there will be winners and losers, but who comes out ahead? Here are some potential winners. Investors who focus on workforce and affordable housing. More government incentives could make this the sweet spot. Buy and hold landlords in growing cities. If housing supply stays tight, demand for rentals could remain strong. Creative investors, those who adapt by offering value-add improvements or exploring new financing strategies, could thrive. And here are some potential losers. Over-leveraged investors. If policies tighten margins, those with little flexibility could struggle. Landlords in heavy rent control markets. If operating costs rise but rents are capped, profitability shrinks. Developers facing high costs and regulations. Red tape could make it harder to build new projects. Bottom line, the next few years could be challenging for some, but they could also create incredible opportunities for those who play it smart. So what do you think? Will the new administration's policies help renters and landlords, or are we heading towards a major housing crisis? If you're an investor, are you adjusting your individual strategy? Let me know in the comments. Like, share, and subscribe for more real estate insights, and visit us at investwithboardroom.com to learn how you can make a passive income in real estate.